Thank you for joining Market News with Rodney Lake. This is a regular program for the GW Investment Institute, where we talk about timely market topics. I'm Rodney Lake, the director of the GW Investment Institute. Let's get started. Welcome back to Market News with Rodney Lake. I'm your host, Rodney Lake. We're coming to you from the George Washington University School of Business, Duquesne Hall, Duquesne Family Studio, right here in the heart of Foggy Bottom, Washington, D.C. Welcome back to the viewers on YouTube, if you're watching there, and if you're listening on Spotify, if you're listening on Apple, Amazon, thank you for coming back, and welcome to anybody that is new. This is a podcast for the GW Investment Institute. We have a series of student investment funds here at GW that our students learn how to invest, learn how to think about investing, and invest a little over $10 million of endowment capital that's part of the overall university endowment, and we put them in charge of that. We try to train them as best we can. If they really want to get into the financial services business, for example, whether that's asset management, investment banking, sales and trading, or any part of the ecosystem that they want to go to, increasingly technology is a enormous part of that. We're trying to train them to do just that. We give them the basic training and they invest our portfolios for us, and we're grateful for that. And the returns have been fantastic. Make sure that you follow our newsletter. And so please subscribe to the newsletter for the GW Investment Institute, the podcast, Market News with Rodney Lake, and also watch us on YouTube for updates and anything else that might be happening at the Investment Institute, LinkedIn, X, Instagram. Pay attention to what's happening with us on social media. Our students are always doing great work. All right, we're in August 2025. The semester is about to get started for the fall. Today, we're going to be talking about a company. Typically, we talk about bigger companies in our portfolio, or oftentimes, let's say. But today, we're going to be talking about a company that everybody knows, very likely, but it's not a huge position. We own it in two of our portfolios, not even all of our portfolios for the GW Investment Institute. And that company is Tesla, ticker TSLA. Now, lots of people know this company. Again, not a huge company for us, but I do think it's an important company to watch, to pay attention to. We had Dan Ives on, for example, on the podcast not that long ago, talking about how he thinks that, Tesla certainly has a bright future, and AI being at the center of that. So I think it's worth talking about as we kick the semester off. We're going to be asking our analysts, our student portfolio managers, to be checking this out. Remember, not investment advice, entertainment, and educational purposes only here for the show, Market News with Rodney Lake. Today, talking about Tesla, we'll go over using the Business Management Price Valuation GW Investment Institute framework to evaluate this company. And again, I'm sure many of you know this company. It's in the headlines almost all the time. There are important things to go over and things to be thinking about. If you watched the recent episode where we talked a little bit about the AI game, Tesla being included in that, in Google, for example, on the full self-driving, and how that might reshape, transportation, how that might reshape the way that people interact with the world, and then who collects, the value there. We're investors. We're trying to make money for our portfolios and for our client, in this case is the university. And we really want to make sure that we're best positioned for the future. And really, in our case, we're trying to train our students on how to do that. How do they do that analysis? How do they best understand what's happening now? Maybe that's shaped by what's happened in the past for sure, but also be really focused on what do we think based on all that, what's happening today and really what's happening in the future, and how do we best position our portfolios for that. And from that training, hopefully, they can take that out and deploy that against whatever type of job that they want to do. We think that's great training, and it's been working so far. We'll continue to do that, evolve that, continuous education, continuous improvement for ourselves as well. We always have to get better, too, at training the people that come through our doors, our students who are superstars, and we appreciate all their hard work. All right, so let's get in. Business Management Price Valuation balance sheet for Tesla. Again, I'm sure most people have heard of this company, know this company. It's in the headlines for a variety of reasons nearly every day. All right, business. So most people, many people would say this is just a car company. But for me and for us, this is really a technology company. Obviously, the cars are one big platform that they have, and certainly the one that drives the most revenue right now. They're also an energy company. They make grid scale storage. that's super important and becoming more and more important. And if you're watching closely what's happening with AI, you're going to need, that type of storage. And you really need the power to be so consistent that when you have variability in the grid, even a little bit, down to let's say the millisecond, that can introduce problems. And so having really things running on the battery where you have a lot more precision for the software that's running that versus, just the electricity coming off the grid. The grid's electricity has to be continuous, right? Until recently, there hasn't been really grid scale storage except for what are dams that pump hydro dams that pump the water back up the hill when power is cheap, and then they sell it when it's expensive. But now you're having battery packs, the mega packs for Tesla, so that's an important component. And now what you would really think about, and Dan Ives talked about this, what's the big play for Tesla is really the real world AI applications. This is probably the biggest, Kathy Wood talks about this, the biggest AI real world project out there. And so even if you're not invested in it as an analyst, investor, business person, I think you should definitely be paying attention to what they're doing, how they're doing it, and then certainly competitors around that. So first, let's talk about some of the specs for the company. I think, you know the way that they make money right now. They're selling cars, they're selling batteries, and certainly now they're working hard on the autonomous piece. They're selling the energy storage and the systems around that, for example. They sell some solar panels, for example, roof tiles, and those related products. But let's now dive into some of the numbers for Tesla. So market cap, this is a large company, $1 trillion market cap, as we sit here in mid-August of 2025. So very large company. Part of what people would call the Mag 7. But let's now take a look at the revenue side. All right, so revenue here, $92 billion. That is through June 30, 2025, the most recent quarter here. So about 92.7, so approaching 93 billion. Gross profit, 16 billion. And by the way, the revenue declined, actually. That's a minus 2.7%. So not great news there. And the projected for the full year through December looks like projected minus 4.6. There's a tax credit that's coming off. That was that was taken out as a result of the big, beautiful bill, the $7,500. If you take delivery by September 30, not an advertisement, you get it, but you got to take delivery of the car as an example. So that goes away. So important incentive there, and they'll obviously need to rework the pricing, and that impacts profitability and everything else. So something for us to pay attention to, but declining for this year looks like in revenue overall. Gross profit, 16 billion, 17.5%, not terrible, but not, you're not talking about NVIDIA type of gross profit margins or Apple as an example, and net profit margins of 6%. So, and free cash flow, $5.5 billion. So if you look at those stats, you certainly are not going to get super excited about those stats as you would when you look at a company like NVIDIA and they're really blowing it out of the water and generating a ton of free cash flow, or Apple even, when you see the stats in Apple generating lots of free cash flow. But so why are people excited about this company? Well, on the business side, you have very few opportunities in the public markets, at least, to get access to real world AI projects, and certainly run by someone, in this case, and we'll get to management, Elon Musk and company, that have delivered across different categories, including in this space. And you think about SpaceX, and you think about Starlink, and you think about Neuralink and the Boring Company, and all these other projects that are running, that delivering really new age things, things that many people thought maybe not be possible. That's a good track record, obviously, for the management. So the business that it's in is obviously more of a mundane business if you think about just as a transportation company. But if you think about it as an AI-enabled company, and it maybe is, depending on how you define it, the largest AI project. And again, if you don't like the company, if you don't like the management, if you don't want to understand it, I think not understanding it is a mistake. If you don't want to own it, obviously, that's up to you as an investor, as a business person, as an analyst. But given how quickly things are moving on the AI front, I think it's imperative as an analyst that you at least understand what they're doing, and especially relative to what other people are doing in the AI game. Because in the real world AI, they are an absolute leader, and they have the humanoid robot coming, Optimus as well. And that total addressable market, the TAM for that is enormous, right? Everybody's going to have an autonomous robot if they can to wash their dishes, clean their house, cook food. That market's big, right? Especially you can finance that. Everyone's going to have an autonomous robot in their house running around, cleaning and doing all the things that you don't want to do that can make you more productive, spend more time with family, all kinds of other things unlock. And that's right. That has also implications for the way that the world gets redone for the types of jobs that are out there. But as a real world AI project, this is a must watch. So pay attention and again, understand what's going on. So on the business side, what's been happening over time. Let's go back 2021, 2, 3, 4. And on the revenue side, 53 billion, 81 billion, 96 billion, 97, 92, right? Decline projected in 2025 full year. That's through December 31, 93, and then 109 for full year 26. So people projecting an increase there in the 2026 number, possibly unlocking some of the autonomous driving. They're launched now in 2 cities. So you have it in Austin and you have it in the Bay Area. It's geo-fenced, meaning there's a specific outline of where they're operating and mapped. But they're doing it with cameras, which is very different than the way that Waymo is doing it. And they're operating in both those markets too. They're also geo-fenced for the moment, which obviously limits the area where they can operate. The geo-fence in the Bay Area is very big relative to the Waymo for Tesla. But one of the primary differences then is the way that they're deploying it. Tesla's deploying it with cameras, which is a way cheaper option than the way that Waymo's doing it with LiDAR and all kinds of sensors on the car, which makes the car very expensive. And so mass producing that is very challenging. So Tesla's tact is different. They're certainly taking a different path. And, people have criticized that. People have thought, well, that's the way to go. And so depends where you are as an analyst. Again, you got to think about that. But on the business side, the way that I at least think about Tesla right now, it is an AI company. And it's a real world AI company. And it makes cars and it makes battery packs. But part of what's happening on the power side, excuse me, is it's going to be an enabler in that market, making sure that you have grid scale storage. You also have this software called AutoBidder. Pay attention to that. If you really want to dig into the power side of the business, I would dig into the AutoBidder software, which they built in-house, which is fantastic. And I think that's going to be a big stabilizer in their business moving forward. And again, the biggest AI project on the planet right now that you can get publicly traded is Tesla. So I think you should be paying attention to it. All right, that's the business. Well, so let's move on to the management, and we can come back to some of these areas. So the management, everybody certainly has heard of probably Elon Musk, and people have very strong opinions on Elon, both for and against. And obviously, he was into politics. One of the things that has been obviously good about first for Elon is obviously the visionary leadership, getting this company from really a startup to an established company, obviously the biggest EV maker in the US, and certainly one of the most dominant EV makers in the world, and a brand that lots of people appreciate. Some people don't like, but a brand that people appreciate. And getting it to $1 trillion market cap, no easy feat. And so, as far as the visionary leadership, getting it from a startup to where it is today, remarkable. And that's one of many companies that Elon Musk has done. So really great track record for innovation, new technology, deploying new technology, and, getting the most out of this business and really getting them to stay on the front foot with that innovation. And if you watch the episode on Apple, one of the criticisms that we have for Apple right now on the capital allocation and management side is really a lack of innovation. And we're okay with obviously Apple in the past being second to market, like on the iPhone, but really kind of falling behind. Tesla would be on the other end of that, where they're really on the front foot on that innovation and really pushing their teams hard to do that. Now, on the capital allocation side, pushing hard into the robotaxis and pushing hard into Optimus. We'll have to see how that works out, but that's what management thinks the future is. That's what management thinks, Elon and company. That's where they think we got to get to those markets. We have to unlock those markets. That's where it is. And then growing the power business as well. That's part of that AI world where you really have to have, a much more stable grid to support all of this compute, as an example, that's happening on these large language models, including one of one that Elon Musk is involved in at XAI Grok. They built effectively their own power plant in Memphis, Tennessee, and lots of Tesla megapack batteries to help support that. And so a lot of this stuff is interrelated, and I think it's sometimes a challenge to work through. And how do you think about all this together, and where do you think this is all going? But for a publicly listed vehicle, Tesla is one way to play this, and certainly on the management side, Elon Musk has had a fantastic track record on the innovation. Now, the other part of this has been on getting involved in politics, being some people think that obviously it's out there, and criticism around maybe he spread too thin, he has too many things going, and one of the things that's been out there is the pay package that got pushed back by the Delaware courts. And so that's, they announced what they called a down payment, a package about a third of what was out there. And so, but these are enormous pay packages, but it's only come with these really high benchmarks. Really no other CEOs have taken that. And so when we talk about this in class, alignment of incentives, Elon Musk has absolutely had this alignment, not getting paid until the numbers are really ridiculous on the growth side. When they first announced the pay package long ago that they got pushed back by Delaware, most people laughed it off as this is not even going to be possible. And this is ridiculous that a CEO would agree to this. No other CEOs would even agree to a package that's like that. And then he achieved those goals and obviously then generated lots of wealth for shareholders. And then Delaware seemed to think otherwise. Delaware courts seem to think otherwise. And so that's all still playing out. We'll see where that all lands. In the meantime, they moved to Texas and moved the company to Texas. And so we'll see how this all goes. But important, at least from the investment standpoint, investor, analyst, business person, alignment of incentives, absolutely there for Tesla on the management side. Capital allocation, obviously you got to do your work. You have to understand that. What do you think? At least in my mind, on the capital allocation is in the right place, going after those big markets and really trying to tackle those big markets. That's autonomous driving. That's the autonomous robots as well. Huge total addressable markets, reshaping the way that the world works, and Tesla being at the forefront of that. Good capital allocation, whether it succeeds or not, is different from what you think on the. Do you think it's the right capital allocation? Does it succeed? We don't know, right? That's you can go on some of the track record, but we definitely do not know what's the outcome of that. And let's say that all that happens, maybe they're not the winner, right? And maybe it's a winner take all, or maybe they participated, but not to the extent that the valuation is there, which we'll get to. So, and before we move on to the valuation, let's grade the business here. High marks for the business, not on the stat side, but where they're going. So could give the business, let's say a 7.5 to 8. On the management, obviously, some very good things on the management side, and some things where you're really, some question marks around, time allocation. Does it make sense to be so involved in politics? Again, as a business person, you think, well, maybe that time is better spent at Tesla. So, we can give a 7.5, 8 there as well. Now we go to the valuation. Now, here's where there's quite a lot of criticism for what's happening on the valuation side. So if you look at what's going on, for Tesla's valuation, this has been a constant concern for people, since really, let's say Tesla's been a public company. But the current valuation, the forward PE is 192, so 192 times. So this valuation is really high, and it's been high. So if you look at the valuation over time, it has never been low. Let's say, at least not for any extended period of time. So the median for the last 10 years is 136. Okay, so we're even over that right now. The high over 300. So not great value on the valuation side. So you have to think about that these things are going to pay off to get comfortable with that valuation. Now, you cannot not invest in things only because of the valuation. So that's something, as a fundamental analyst, if you're steeped into the Ben Graham world and Warren Buffett, it gets very difficult to pay that type of multiple for these companies. But if you look at the total addressable market for some of the AI plays, well, should you ignore it also? And so this is where the challenge comes in. And obviously, if there are sell-offs and you think you can take advantage, that's a different story. But if you're buying it today, you're paying up. And so that's something that you have to consider. So on the valuation side, it's a really high valuation at the moment, especially relative to the S&P and even relative to itself. It's on the high end. Now, people are giving credit for those big markets, right? And so, time will tell whether that's the case or not. So you can give the valuation, let's say, a 5 or 6 for that. And then you move on to the balance sheet. The balance sheet here really, certainly not incredible balance sheet, but you're going to sleep at night. $36 billion if you look at the trailing 12 months through June 30, and $13 billion in debt. So you're going to have net cash, $20 billion, not plus. So you're not really that concerned. Generating $5.5 billion of free cash flow. And if you look at over time, they've been pretty conservative and gotten the balance sheet in better shape. In 2021, you had $17 billion, in 22 billion. This is cash. $29 billion in 23, $36 billion in 24, $36 billion. Now, net. So really net cash for all of those years, going back to 2021. So really, good job, kudos, especially in a capital-intensive business. Having such a conservative balance sheet is a great thing. Again, that helps to sleep at night. Now, they do burn a lot of cash, building things. And so it is more of a capital-intensive business than other businesses that we talk about, like Apple, NVIDIA, to compare the two. So, balance sheet, good. Let's give it an 8 on the balance sheet. So if we pull the scores together, you're talking about, the business, 7.5, 8, management, 7.5, 8, the valuation, again, very high valuation, let's say a 6. And if you look at what's happening on the balance sheet, you can give 7.5, 8 there. And so overall, maybe you're talking a 7.25 or, and depending on how you want to blend it and you want to pull one up or down, let's say you're talking about, 7.25 to 7.5 overall for Tesla. And so, again, not a great score for some of these things, and overall an okay score. Something to watch, not a huge position in our portfolio at the GW Investment Institute, but our students need to watch this. I do think as an analyst, as a business person, as an investor, we have to pay attention to this for the real world AI applications and making sure we understand what it's doing relative to what other people are doing, where this market is today, and especially where we think the market is going into the future, and how do we participate? Is it through Tesla? Is it some other way? But we have to figure that out as best we can. And our analysts will be working on it this fall semester when we get back to work, fall 2025. That's it for this episode for Market News with Rodney Lake. Thank you. See you on the next episode. Disclaimer, the content shared in the GW Investment Institute podcast is for informational and educational purposes only and should not be considered investment advice. The opinions expressed in this podcast are those of the host and guest and do not necessarily reflect the views of the GW Investment Institute or the George Washington University. Listeners should not act upon the information provided without seeking professional advice from a qualified financial advisor. Investing involves risks, including the loss of principal. The GW Investment Institute, the George Washington University, and the podcast hosts do not assume any responsibility for any investment decisions made based on the content of this podcast. Always conduct your own research and consult with a financial advisor before making any investment decisions.